Good evening, ladies and gentlemen. Welcome to the Academy of Commerce and Accounting Master Classes for Business Literacy. I hope these exams will actually help you guys get a great mark in your exam, okay? So, guys, moving forward, we are going to be having online classes. So the online classes go for a period of about 6 weeks, and obviously they're also done on Google Classroom, just like we are doing with these ones. And they go for 1,250 per subject, and they happen 6 o'clock to 10 o'clock Monday to Thursday. Okay, so we will have online classes for each exam sitting, guys. So we are going to have one for each exam sitting all the way till next year, March exams. And so basically what we're going to be doing here is we're going to be going through the exam with you guys, through the textbook with you guys, and we're going to go through, help you with the online tests, help you with the assignments, and obviously give you a thorough exam preparation, okay? So the dates on when they're going to start and are there, and when they end, we've supplied them on the slides. Please, if you are interested, don't hesitate to contact us, okay? So similarly, we are going to have master classes, okay? So master classes are going to be very similar to the classes that we're having now. They go for 750 Rand per subject, okay? They go for 750 Rand per subject. And so basically what we are going to be doing here is we're just strictly preparing you for the exam, okay? And they will happen probably just around 2 or 3 weeks before the exam. So they go on for about a week, and then you'll have some time to go and prepare for your exams before you actually go and write the actual exams. We are going to have master classes for all exam sittings. So we're also going to have, in October, we're also going to be having a graduation ceremony, okay? So if you have completed any of those qualifications and your college is not offering a graduation ceremony, or you are not, or you are a self-study student, you are welcome to join us. Please contact us in time so we can arrange that you join our graduation ceremony, okay? So another thing is, please guys, go and like our Facebook page. It is the Academy of Commerce and Accounting. We will be sharing a lot of information on this page. Please go and like it. We'll highly appreciate it. So now I want to start with the business of the day, okay? So the class that we're going to be doing today is business literacy, the business interest portion. Guys, this question is very important for the exam. It will be asked in the exam. You're definitely going to get this type of question in the exam, and I think it goes for about 20 marks, okay? So first thing, I just want to go through the simple interest, okay? So the formula for simple interest is going to be principal multiplied by the rate multiplied by the time, okay? Principal is the present amount, is the present amount being invested or borrowed. The rate is the percentage at which the principal is growing, and the time is time which the principal is invested or borrowed, okay? So suppose they say to you, you invest 1,000 Rand at 10% per annum for 5 years, okay? So two types of questions can be asked here, guys. They can either ask you to calculate how much simple interest is going to be earned, or what is the future value of the amount at the end of the period, okay? So if they just asking for the simple interest, you're gonna go and use the formula I is equals to P multiplied by R multiplied by T. That is principal multiplied by rate multiplied by T. Okay, so our principal is going to be 1,000 multiplied by the rate, which is 10%, multiplied by 5 years, which is 500. Okay, so if they're asking you for simple interest, that's all, you are done. So your simple interest are therefore going to be 500. Okay, so if they ask you how much will the amount be at the end of 5 years. That means they're asking you for the future value, okay? So again, you're going to go and follow the formula for simple interest, and you're going to go and say I is equal to P multiplied by R multiplied by T, which is 1,000 multiplied by 10% multiplied by 5, which is 500. Remember, the 500 is just the simple interest. So you'll need to go and add back the principal, okay? The initial amount that was invested of 1,000 Rand to get the amount for 1,500. So that means the amount, if you invest 1,000 Rand, it's going to earn 500 Rand in interest. So at the end of the period, it's going to be 1,500, okay? So in some cases, guys, they can give you the period in months, okay? So if the period is given to you in months, you just need to go and divide it by 12, okay? So suppose they say to us, you invest 1,000 Rand at 10% per annum for 36 months, okay? So your formula is going to be I is equal to P times T multiplied by R, right? So which is 1,000 multiplied by 10%. Remember the time is 36 months, so you're going to go and say 36 divided by 12. And that should give you 300, guys. So even if the month is 5 months, you still divide it by 12. Even if it's 6 months, you're still going to go and divide it by 12. So in some cases, okay, the question can ask for principal. They can ask you to calculate the principal invested or the principal borrowed. So in this case, you need to go and change the subject of the formula to P, okay? How do you go about doing that? Can you see? The original formula is I is equal to P multiplied by R multiplied by P. So what do you want? You want P to stand alone, okay? So you're going to go and divide both sides by R times T, okay? Then your formula is going to be P is equals to R all over T. Because remember, on the other side where there's the principal, it's going to cancel each other out. That's why you're going to end up with the formula of P is equals to I all over R multiplied by T. Next, they can also ask you to calculate the rate. So again, you need to go and make the rate the subject of the formula. So in this case, you want the R to stand alone, okay? So you're going to go and divide both sides with P multiplied by T. And you're going to be left with a formula that says rate is equals to I all over P times T. Again, they can also ask you to calculate the time, okay? So what do you want here? You want T to stand alone. So you need to go and divide both sides with P multiplied by R, and your formula would therefore be T is equals to I all over R, okay? So those are just a few things that you need to know about simple interest. So now I want to move to compound interest, okay? So basically what compound interest, like if I can just explain it in my own words before going and getting into the slides. Compound interest would be, let's say you invest 1,000 Rand at 10% for 5 years, okay? If it's compounded, remember in the first year, it's going to earn 100 Rand, right? So in the second year, when you're going to go and calculate the interest, you're not going to calculate it based on the 1,000. You're now going to calculate based on the 1,100. So you're going to add the 100 that was earned in the first year, okay? So, but there's no need to calculate that way because there is a formula that is given to us. So the formula for compound interest will be future value, okay, is equal to present value, open bracket, 1 plus I to the power n, guys, to the power n. So the F is for future value, PV is for present value, I is for interest, and N is for the number of years, okay? So suppose they go again and then they say to us, you invest 1,000 at 10% compounded annually for 5 years. Again here, two types of questions can be asked, okay? They can either ask you, how much will the amount be at the end of the 5 years, so they want the future value. And remember, this formula takes you straight to the future value. So the answer that you're going to get using this formula, you're going to go and leave it as it is, okay? Or similarly, they can go and ask you how much interest was earned. So you'd obviously need to go and deduct the present value to get the interest, okay? So let's go and look at the following example. If they're asking us how much will the amount be at the end of the 5 years. So the formula is FV is equal to PV, open bracket, 1 plus I to the power n, right? So you're going to go and take 1,000 being the present value multiplied by open bracket 1 plus 10%. When you go and put in the percentage, guys, please go and put it as a decimal. So instead, then you're going to go and have 0,1 close brackets to the power 5. And that's going to give you 1,610.51. That is not interest. That is how much the amount is going to be at the end of 5 years. Again, they can also ask you how much interest is going to be earned. So again, you're going to go and follow that formula of FV is equal to PV multiplied by open bracket 1 plus I to the power n, which is 1,000 multiplied by open bracket 1 plus 0,1 close brackets to the power 5. That's going to give you 1,610.51, right? Remember, we are looking for the interest, okay? So what do we need to go and do? We'll need to go and deduct the present value. So you're going to go and deduct 1,000 from that future value amount, and that should give you 610.51. So the 610.51 would therefore be the interest earned, okay? So in some cases, the question can ask you for the present value, okay? So if they're asking you for the present value, that means you need to go and change the subject of the formula to PV, okay? So PV is, that means you want PV to stand alone, right? So you're going to go and take that original formula and divide both sides by 1 plus I to the power n. And that should give you PV is equals to FV all over 1 plus I to the power n. Okay, so in some cases, okay, remember the question that I was doing, that is when interest is compounded annually, okay? So in some cases, they can say to you, interest is compounded half yearly. So whenever interest is compounded half yearly, the question that you're going to ask yourself, how many halves are there in a year? Okay, there's obviously 2 halves. So your formula is going to change a little bit to future value is equal to present value multiplied by open bracket 1 plus the I over 2 to the power, close brackets, to the power n multiplied by 2. Okay, so similarly, they can say to you, interest is compounded quarterly. So you're going to ask yourself, how many quarters are there in a year? Obviously, there are 4 quarters in a year, okay? There are 4 quarters in a year. So your formula is going to change to FV is equal to PV, 1 plus I all over 4, close brackets to the power n multiplied by 4. It can also be compounded monthly, and there are 12 months in a year. So your formula is going to be FV is equal to PV, 1 plus I all over 12 to the power n multiplied by 12. And similarly, compound interest, it can be compounded daily. So how many days are there in a year? There are 365 days in a year. So your formula is going to be future value is equal to present value, open bracket 1 plus I all over 365, close brackets to the power 365, okay? So now I want to go and look at a practical example, how they're going to go about asking this question in an exam, okay? So they can say to you, okay, if you invest 199,000 for 5 years with simple interest, remember, with simple interest, so you know they're looking for simple interest here, with simple interest being calculated at 9% per annum, what is the amount at the end of the period? So they're not looking for simple interest, okay? They want to know what is the amount at the end of the period, okay? So their formula is going to be I is equal to P multiplied by R times T. So P is 199 multiplied by the rate of 9%. The decimal for that is 0.09 multiplied by 5 years, and that's going to give you 89,550. Remember, they are looking for the future value because they want to know how much the amount is going to be at the end of the period. So you'll need to go and add back the principal of 199,000, and that should give you 288,550. Second one is they can go and say to you, if you borrow 108,000 for 36 months at 11.35% simple interest, how much will you repay at the end of the period? So they want to know how much you are going to repay at the end of the period. So they are looking for the future value. Okay. So, and remember something, the time is given in months. So you need to go and divide by 12. Okay. Remember, the formula is I is equal to P times R times T. So P is 108, R is 0.1135. And the time is going to be 36 months divided by 12. And that should give you 36,774, which is the simple interest. So you'll need to go and add back the principal of 108, and that's going to give you 144,774. Okay. Next, 4.3, they say calculate the simple interest. Can you hear? Calculate the simple interest on 233,000 borrowed for 32 months at 11.15% per annum. So they're just looking for the interest on this one. So there's no need to add back the principal to the answer. And again, the time is given in months. So please don't forget to divide it by 12. So you are going to have I is equal to P multiplied by R multiplied by T. And that's going to give you 233,000 multiplied by 0.1115 multiplied by 32 divided by 12. And that should give you an amount for 69,278.67. For those that don't know how I changed that percentage into a decimal, all I did is I just took the 11.15 and I divided it by 100, okay? So, next question. They say, what is the principal that must be invested for 4 years at 10.5% to earn 6,900 simple interest, okay? So this formula is looking for simple interest. No, sorry, it's looking for the principal. So you'd need to change the subject of the formula to P. And that's going to be P is equal to I all over R multiplied by T, okay? And then I is going to be 6,900. That's the interest. All over, the rate is 10.5%, okay? So guys, whenever a fraction, a percentage is given to you in this mixed fraction format, okay? On your calculator, go and say 1 divided by 2, right? 1 divided by 2 is going to give you 0.5, okay? Then you know that your percentage is 10.5. So you're going to go and add that 0.5 to the 10. So that means your percentage is 10.5. Then when you add 10.5, you can go and divide it by 100 to get that 0.105, okay? And then the time is obviously going to be 4 years. So you're going to go and multiply by T, okay? So when you punch this in your calculator, guys, if you don't have those calculators that can do fractions, please first go and calculate the bottom side, okay? And then find the answer for the bottom side and then say 6,900 divided by whatever you would have found, okay? If you have that calculator that can put in a fraction, just go and put the fraction as it is, okay? And it should give you an answer of 16,428.57. So you'd need to invest 16,428.57 for 4 years in order to earn 6,900 simple interest rate. at 10% per annum. Okay, so now I want to move to the next question. So the next question is, they can go and ask you, you have invested 35,000 at a bank at a simple interest rate of 4.5% per annum. Okay, for how long should you invest it to yield a future value of 49,000? So this question is asking you for time, guys. So you'll need to go and make T the subject of the formula. Okay. So if you go and you make T the subject of the formula, you're gonna get T is equal to I all over P times R. Okay. So now when you go and you substitute, you will notice that you do not have interests. Okay, you do not have the amount for interests. Okay, so you need to go and calculate interest. How do you go about calculating interest? You're going to take the future value minus the principal to get the future value, and it's going to give you 14,000. Again, just to explain this, to put this in simple words, is if you come to me today and you say you want to borrow 10 rand, right? Say, no, it's fine, but it must come back as 15 rand on Friday. Okay, so the 15 rand is a future value, am I correct? We all know that the interest there is going to be 5 rand, right? Because it's very simple to calculate. So how do you go about getting that 5 rand? You said 15, which is the future value, minus 10 rand, which is the principal, okay, to get that 5 rand. So that's the same thing that I did here when I took that 49,000 future value minus the principal of 35,000 to get the 14,000. So your interest is 14,000 divided by the principal. The principal is 35,000 multiplied by the interest. So the interest is going to be 4,5. Remember, when you go and say 1 divided by 2, it's going to give you 0,5, and that's going to give you 4,5% when you go and add that to the 4. Okay, so the fraction for that is 0,045. Okay, so if you don't have the calculator that can punch in this entire calculation in, calculate the bottom side first, get the answer there, and then go and say 14,000 divided by whatever you would have found in the bottom. So if you have the calculator that can do that, just go and punch, that can put in a fraction, go and punch that amount as it is. Okay, so your answer there should be 8,89 years. Okay, that would be the time. So the next question says to us, you want to make an investment at a bank at a simple interest rate of 5.2/3% per annum that will yield a future value amount of 71,500 after 8 years. Determine the principal to be invested. Okay, so this question is asking you for the principal. So you'll notice something. If you're going to go and make P the subject of the formula, you're going to have P is equal to I all over R multiplied by T, right? But you're going to have a problem with this particular formula because you won't have I, so you won't have the interest, and they've only given you the future value, they haven't given you the present value, so you can't go and do the calculation that I did in the previous example. Okay, so whenever you come across a situation like this, is you need to go and use the formula FV. So P is equals to FV all over 1 plus R times T. Okay, that's the formula you're going to use only in this particular case, guys. And then when you've got this, you can go and substitute. Okay, so you will notice the future value is 71,500 all over 1 plus 5.2/3%. Remember, with this 2 over, you're going to go in your calculator, you're going to punch 2 divided by 3, and that's going to give you 0.67. That means your percentage is 5.67, guys. So if you divide it by 100 to take it to a decimal, you should get plus 0.0567 multiplied by the 8, and that should give you a principal of 49,188 rand 22 cents, guys. So let's move to the next example. So the next example they say to us, determine the difference in interest earned when 746,000 is invested for 10 years at an interest rate of 8.3/4% per annum in the following ways. So in simple interest and in compound interest. So firstly, simple interest, remember, okay? They say determine what? Determine the difference in interest. So that means this question is asking for the interest, okay? So when you're going to do the simple interest calculation, you're going to have I is equal to P multiplied by R multiplied by T. That's going to give you 746,000, okay? Multiplied by 0.0875 multiplied by 10. And that should give you an amount of 652,750. That is the interest. So you're going to leave it as it is. Again, how did I get to that 0.0875? I said 3 divided by 4, which gave me that 0.75. Then I added that to the 8. That means my rate was therefore 8.75%. And when you go and you divide it by 100 to get a decimal, you'll notice it's going to give you 0.0875. Okay? So next, I want to move to the interest compounded annually. So this question is asking for the interest compounded annually. So you'll need to go and deduct the present value from the answer because we are looking for the interest, okay? So future value is going to equal to 1 plus I to the power n. So now we need to go and substitute. The present value is 746,000 plus 1 plus 0.0875 close brackets to the power 10, okay? And that's going to give us 1,725,963 rand 1 cent, okay? So now you can go and deduct the present value of 746, and that should give you 979,963.01. That is the amount for interest, guys. So next question, they say if you invest 88,500 for 8 years at an interest rate of 8.5% per annum, what will the value of the investment be at the end of 8 years if interest is calculated as follows? So this question is asking for the future value, okay? So when you're using the simple interest method, remember the simple interest method leads you straight to the simple interest. So don't forget to go and add back the principal. So interest is equal to P multiplied by R multiplied by T. So you're going to take 88,500 multiplied by 0.085 multiplied by 8. That's going to give you 60,180. That is the interest. But we are looking for the future value. So you need to go and add back the principal of 88,500. And that's going to give you 148,680. Next is you've got the interest compounded half yearly. Okay. So remember the question is asking for the future value. So with this formula of compound interest, you're going to go and leave your answer as it is. But remember, the interest is compounded half yearly. So your formula is therefore going to be future value is equal to present value, open bracket, 1 plus I divided by 2 to the power n multiplied by 2, okay? So you're going to go and substitute. The present value is 88,500 multiplied by open bracket 1 plus 0.085 divided by 2 close brackets to the power 8 multiplied by 2. And that's going to give you an amount of 172,250 and 42 cents. Okay, so next I want to move to the next question. So the next question says to us an investment will be worth 202,000 if invested for 84 months at the rate of 6.75% per annum, compounded quarterly. Okay, compounded quarterly. What is the present value of the investment? What are they looking for now, guys? They are looking for PV. Okay, so, and remember, it is compounded quarterly, and we have 4 quarters in one period. Again, you notice that the period is given in months. Okay, so you need to go and have 84 divided by 12. So 84 divided by 12 is 7. So it's actually 7 years. Okay, so when you go and you do the formula, you'd first need to go and change the subject of the formula to PV. That means you must go and divide both sides by 1 plus I all over 4, close bracket to the power n multiplied by 4. And that should give you a formula of PV is equal to future value all over 1 plus I all over 4, close brackets to the power n multiplied by 4. And that should give you an amount of 202,000. Sorry, no. Now I want to go and substitute. So I'm going to go and take the 202,000 all over 1 plus 0.0675 divide by 4 to the power 7 multiplied by 4. Okay, again with the power, guys, you could have easily just went and said 84 divided by 12 multiplied by 4. Okay, you still have gotten that 126,432 rand 70. Okay, so this way I'm going to end it for today's class. So what I want you guys to go and do, there's a self-attempt question that's very similar to this one that I want you guys to go and do. It is in your slides. So tomorrow when I send the slides for tomorrow's question, I will include the solutions. Then you can go and look at the solutions. But I hope the class was fruitful, and I hope I made this question slightly similar, as it is an important question. And again, I thank you guys for joining the Academy of Commerce and Accounting Master Classes.